Umang Nahata joining us, CEO of Mastech. Mr. Nahata, welcome to the show and thank you so much for your time here on NDTV Profit. Let's get your take on how you've seen this quarter.
Yeah, I think it's a modest quarter. I would say we've had good revenue uptake in the quarter, especially our UK Europe business actually saw phenomenal growth as far as their quarterly performance. The overall revenue growth in that sector was phenomenal. Having said that, the North America business did have a degree of impact of the short-term uncertainties that we are currently running through, which led to slowness in some of our businesses that we run there. In spite of the overall setup, I think overall revenue performance did grow well in this quarter, around 4% QOQ. As we look at the bottom line performance, so the growth that we saw in our businesses were largely driven by data AI-led capabilities, especially in our UK Europe business. These are more front-ending and secured resource kind of capabilities that we are currently getting into and delivering. Some of these required us to execute and hire more on-site, as well as work with a few partners and startups to really deliver the kind of front-ending work that we are getting into. And those have impacted our bottom line performance in the quarter. There's also been a one-time prior period charge because of this change in accounting method that we were following. So we're now following a more scientifically or a more objective ECL method for recognition of provisions on our unbilled revenues. So those, I would say, are a mix and match. In general, I would say we feel very optimistic about our focus and demand in the core business that we have, which is around UK, Europe, Oracle. And we are also upbeat about the growing penetration of data and AI in our business. There's also, I would say, a balance between how we see the macro in the North America business that we run.
Okay. Tell us a bit about these other expenses that are up. Is that because of the accounting change?
No, so there are two parts to it. The other expenses that you see are largely, like I said, the kind of work that we are getting in UK is a lot on data and AI and front-ending capabilities. These are capabilities that we are still building and expanding into. So some of these capabilities we have to partner and get subcontractors in our business. These were also locally required security cleared resources in UK. And therefore that subcontracting / partner expenses for the quarter has gone up. So that portion of work comes from them. We are almost around 80 on-site resources that we have to add or ramp up in the quarter. The second is the difference between the operating profit and the PAT. That is largely due to a one-time cost that we saw prior period as we changed the method. It's not that these receivables are not collectible. It's just that the accounting method change allows us to put up a higher provision than what we were putting up earlier, and therefore it's a one-time charge for the prior period.
8 crore exceptional loss that you're describing right now.
That is correct, the 8 crore exceptional loss that you saw.
Okay. Tell us a bit about the order backlog as well, Mr. Nahata. Yeah. That is, is that giving us a sense that you're going to see a bit of pain in new orders going forward? How are you looking at that number?
So the order backlog, you are rightly pointing out, our overall order backlog, while if you look at technically it's only 1.7% year over year that we have grown. Having said that, the cycle of business that we run usually has a week or two of delay in some of the order cycles before we get the contracts signed in. So as we speak, as we stand today, we've added another 15 million worth of these contracts that were already in commit stage, but they've now been signed in. And if you add that 15 million into our backlog, it's almost 7 to 8% year on year and a 12% quarter on quarter increase in the order backlog. So yeah, it's a little slower than what we would have hoped for, but it's not the dramatic 1.7% that we are looking at. Having said that, our business in US especially is seeing a degree of right shift in demand or customers being slow in making their decisions, and that might have some short-term impact as far as the new book of business is concerned.
Umang, good morning, Neeraj here. Just a couple of macro questions. This India-UK FTA being on the throes of getting signed, could it have any meaningful impact on business considering the UK exposure that you have?
We feel very upbeat about our relationships and the India-UK relationships also growing. And we are right now in the, one of the key Indian partners working with the government as well as healthcare and government affiliated organizations like, various, financial services organizations. So we are pretty optimistic that our focus on the UK-Europe market will allow us to create a significant balanced growth for Mastech as an organization. I think for now our moderate dependency on US and a much higher business in UK is actually playing to our strengths as we step forward. So yeah, we feel that these strengthening ties between India and UK should also allow us to further grow and expand into the business that we have there.
Got it. The other aspect, Umang, and because you do not have as much US as maybe some others, but even in US facing companies, I've heard companies post the results talk about 0 to 3%, best case, worst case. Some companies talking about a completely flat number for FY26 over FY25, and a couple of very small size or mid-sized companies relative to the Nifty names talk about lower double digit or just higher single digit growth as well. Now, considering the dynamics that you operate in vis-a-vis some of the other IT companies listed out of India, what's your sense? Where do you wedge in for FY26?
Yeah, Neeraj, I think our overall book of business in US is pretty small. Right?
Exactly.
So it's not as big, and therefore, the potential for us to grow is much higher. Having said that, we are also closely observing the macro changes. A lot of our customers are in public sector and healthcare, which clearly have an ask from the government of either their funding has been held back or they've been asked to bring down their fundings. So we are currently seeing, given all of this together, and having said that, in the same breath, we are also seeing a lot of positive demand on data and AI from our existing as well as new customers. So putting all of that together, I would say early double-digit kind of numbers is where we are currently anticipating our FY26 performance for US.
Okay. One last question from mine. This whole DXY or the dollar weakness that we've seen, and there's a serious one thus far. No one knows where it will go. But with the presumption that we are looking at a relatively weaker dollar than what we've seen in the previous decade, does it have any meaningful implications for either the pricing of the orders or your hedging strategies or both?
Yeah, I mean, as far as hedging strategies are concerned, clearly, so for example, we had a hedging strategy which would keep looking at like year 3, year 4 also. We've constantly started reducing the year 3, year 4 exposure or brought down the hedging. We are not necessarily hedging year 3, year 4. We're more hedging short to medium term right now because we don't know how the long-term rates are going to play out. So from the hedging point of view, we are actually taking a more cautious view. We are, it's a more wait and a watch before we go out and do more long-term hedges. As far as the rates are concerned, we haven't seen any effects of dollar rupee kind of change that has really made any important change in our rates today. Having said that, we are closely observing those also, and I mean, depending on where it lands, like you said, it's very uncertain and volatile. So it's hard to make any change immediately because many of these contracts are much more long-term in nature. So we're currently not making any rate impact changes, but if this grows or continues to grow in that direction, then yes, there would be a pricing impact that we will have to take care of.
All right. Thank you so much, Umang, for speaking with us. Umang Nahata, they're the CEO of Mastech, talking about the quarter gone by. The story of this morning, and yes, the Nifty is about